Good evening, everybody. So, I just wanted to give this, um, might not be brief. So, I wanted to give this demonstration on how I approach the trading day from the top down analysis. So, um, as you can see, I have Monday's daily candle mark here. And the BSL stands for buy side liquidity, and the SSL stands for sell side liquidity. So those are the highs and the low of the previous day daily candle. Um, so when I got up this morning, I already had yesterday's high and low mark on the chart for buy side and sell side liquidity. And then I come down to the 1 hour time frame when I get up in the morning, which is around 5 o'clock, 5:30 most mornings, right? And here go those low and high areas that I had marked on the daily time frame for yesterday's high and yesterday's low. This STSSL stands for short-term sell side liquidity. So that's what that stands. So when I get up in the morning around 5:30, you can see this morning price was around here, 5:30. Um I go ahead and identify the London range, which is formed between 2 a.m. and 5 a.m. Eastern Standard Time. So I identify the high and the lows of that range, and then I wait for price to react to that range. So I wait to see if price action reacts bearish to that range or if it reacts bullish to that range. And then I start looking for my setup. And so I also identify short term sell side liquidity levels because that's where I'm going to be looking to take partials or take profit if the market goes bearish. If the market goes bullish, then I would also be looking for short term buy side liquidity and for price to reach up to the previous daily buy side liquidity. And so this morning when I woke up and got on the chart, it was about 5:30. So I went ahead and identified the 2 a.m. to 5 a.m. range. And then I continue to do my top down analysis. So now we're on the 15. We go from the hour to the 15. As you can see, still have your buy side, sell side liquidity, short term sell side liquidity identified. We have what Michael Huddleston has coined the breakaway gap here. That's when a fair value gap is created and price comes back up perfectly to that candle that created the fair value gap down to the decimal um, without breaking up into the fair value gap, then that's a breakaway gap. And so when I come down to the 15-minute time frame, I want to see how price, like I said earlier, reacts to that London range, that 2 a.m. to 5 a.m. range. And as we can see, this morning we had a bearish reaction to that range. We broke below that range in a bearish move. And so I can then go ahead and break down to the 5 minute and start looking for some fair value gaps um, to get ready to execute my entries. So when we see that bearish reaction to the London range and we see price break down below it, we look to see if a fair value gap was created within that move, and it was. You can see it here. And so we look to play off of that move once price swing back up. I'm sorry, we look to play off of that fair value gap once price swing back up into those levels. And so you can see um price swung back up here into that fair value gap and gave you another sell off. You want to look to see if another fair value gap was created within that move, and indeed it was here. And so you want to put your entry within this fair value gap. You see my entry this morning was here. If I add execution to the chart, you'll see that I entered a sell here. I jumped the gun a little early here, so I sold it right here. But then I sold here 5 contracts and added another 5 contracts here. And then I closed those 10 contracts out here at my short-term sell side liquidity target here. So I also, one second. In 1 second, trying to get the executions off the chart. Okay, so this was my first entry this morning here at the second fair value gap that was created after we seen the confirmation of the swing back and the retest of the fair value gap, and then the sell off to break that market structure. And the fair value gap that was created within that move is your entry for, was my entry for my first sell this morning. And then the push down that price action gave us here, the bearish move that price action gave us here, another fair value gap was created there. So I used that as my second entry here this morning. This is my TP. And I was done for the day. And then I just went ahead and identified the breaker block here that we see. We see this low, this high, this lower low, and then we see that broken. And so we see price come back down and retest that that breaker block, perfect. Right there. Let me take these off. All right, so right here, breaker block, right there. This bearish candle right here, bearish candle right here. Came it down to retest this breaker block because we got a low, high, lower low, and then we break that. We break that high. That's your breaker block. And we break it, price comes down, and when we come back up, we come back down to retest it perfect. Then we reach up into our breakaway gap, fair value gap, and then we almost reaches up. We almost reach up and take out our previous day buy side liquidity, but before we do, we rebalance back down to the breakaway gap, and then we close the day taking out the previous day's high. So as you can see, you had numerous setups, numerous opportunities this morning to take multiple trades. You could have either went with a sell for the bearish movement after the London market, London range, or you could have waited for the breaker block to form and took the buy off of the breaker block, targeting previous days buy side liquidity. So I just wanted to give you guys that demonstration. And as you can see, if we break it down to the minute time frame, you kind of see a little better all those plays um, that played out. 1, 2, 3, with this being the final TP from here to here. And then we seen the breaker block form with the low, high, lower low, and then pushed up through that high to create the breaker block. And then we came back down. Came back down and respected the previous low. We pushed up to come back down and retest that breaker block to reach up and take out previous days buy side liquidity. So that's how I approach the day. That's how I decide how I'm taking my trades, targeting those areas of buy side, short term liquidity areas, and just following price action. So I hope this demonstration was helpful for you guys. Anybody have any questions about the video, drop them in the group chat. All right. And if you're not in the group chat, then you would need to sign up for our subscription service that you can find on our website at precisionhitsllc.com. All right. As always, let your family and friends know you love them while they still here. And peace and love, everybody. You know